Looking at this visualization of 100 people, you see the actual math behind the sports trading market. Every day, thousands enter this space, looking to buy a house, a car, or permanently change their lives. But the brutal reality is that 96 of them will fail, leaving only 2 to 4 who actually survive long enough to build wealth. The reason for this massive failure rate comes down to methodology. Newcomers routinely treat the market like a lottery, or SATA, frantically chasing shortcuts across dozens of chaotic messaging groups. Sports trading is a highly volatile environment. To survive it, you have to completely kill the gambler mindset and adopt the strict operations of a business owner. This business framework acts as a shield for your life savings. In an environment this volatile, it is the only mechanism that prevents a total loss of capital. The first fatal trap amateurs fall into is the illusion of certainty. They search online and inevitably find a scammer guaranteeing a 100% fixed match. Think about the logic here. If an insider actually possessed guaranteed fixed reports, they would be quietly trading their own money to build wealth, not selling cheap tips to strangers on the internet. Professionals operate on a completely different axis: probability. They understand that individual predictions will inherently be wrong sometimes, but those probabilities can be carefully managed over the long term. If you cannot perform deep data analysis yourself, the professional approach dictates a strict filter. You find exactly one genuine tipster, verify their historical strike rate over 10 to 20 matches, and then completely ignore all other noise. Accepting that uncertainty exists and relying strictly on verified historical data is your only defense against the predatory scams flooding the underground market. This split-screen chart illustrates how professionals focus on league-specific behaviors. IPL data on the left highlights success for chasing teams, while the PSL chart shows an advantage for batting first. Drilling down, they hunt for micro-patterns, like teams consistently scoring 50-plus runs during the power play. These statistical trends connect to real-world variables. Traders weigh factors like pitch reports, ground history, and the outcome of the coin toss before deploying capital. Compare this to the gambler who blindly waits for a heavy favorite's odds to improve. Heavy favorites frequently dominate from the first ball to the last, meaning that better entry point never actually arrives. Rigorous statistical analysis and pattern recognition separate a calculated business investment from a blind emotional bet. But even with perfect data, the hardest skill for any trader to master is match selection. A true professional knows exactly when to walk away and skip a match entirely. Not every opportunity is profitable. In this business, the money you save by choosing not to trade is functionally equal to the money you earn. When the live action starts, two massive psychological forces step in to destroy accounts: greed and fear. This live trade graph shows exactly how these emotions manifest. Fear causes an early exit marker on a tiny upward peak, securing a minimal win. Then greed takes over, prompting a hold marker as the value plunges deep into the red, refusing to book the loss. The mathematics of this toxic emotional cycle guarantee ruin. The trader consistently takes very small profits while absorbing massive account-draining losses. Mastering your own psychological impulses during live play is just as critical to your financial survival as mastering the pre-match data. The ultimate dividing line between a gambler and a professional comes down to capital defense. You must never trade using loans, borrowed money, or credit cards. Borrowed funds introduce a level of pressure that overrides logic. Decisions are fueled by panic, leading to high-stakes mistakes that a trader using their own liquid capital would avoid. Let's strip away all the illusions. No strategy guarantees a win, there are zero shortcuts, and sports trading carries severe financial risk. The professional's business plan is highly constrained. Maintain strict discipline, keep meticulous records, and above all, protect your core capital so you can survive to trade another day. Long-term success in this industry rarely comes from hitting a lucky, cinematic jackpot. It comes from the quiet, disciplined process of managing probability over time.